And we're live, everybody. Hello and welcome to another episode of This Week in Real Estate, hosted by yours truly. My name is Ray. I'm a bearded man of real estate. And we are live on Facebook, Instagram, and YouTube. And of course, as always, Clubhouse. So thanks everyone for joining us. If you want to join the show live, all you have to do is go to YouTube and search for This Week in Real Estate. You may have to put my name. There are some other shows out there, but they have not been running nearly as long as this show. So there are a couple. But you can go to YouTube and find it there. I would say subscribe and hit the bell so that then you can respond live. You can also follow me on Instagram, but I was just talking in the pre-show, I might cut the Instagram stream because there's just not a ton of activity over there. And I'm limited on the number of streams I can have. So we're thinking about it. If you're over there watching on Instagram, you got to participate. If you're on YouTube, you could comment. I could talk about you, or I could talk about your comment. Elizabeth Nightingale from Charleston, South Carolina. She checks in. What's up? Hillary Kerchief from Nashville. She says it's a bit faster this time. And hello to Ray as well. Thank you very much. And Mia's over there now. What's up, Mia? So you guys can also do the gifted stuff, but I don't know really what it does. Somebody asked me about that and gave me like $10 on YouTube. Number one, I think I get the $10 somehow. I don't really... I think they have my information because of AdSense. So, but it does display your comment at the top longer. So there you go. Living in Columbia, SC says, SC in the house. What's up, Courtney? So thank you guys for joining there. You can also comment. I can display your comment on Facebook. If you comment and you're over there on Instagram, I can only just say hello to you. So let's see. Sandco Beth says, hello from Central R. What's up? Thanks for joining the show over there. I wish I could display Instagram comments, but I can't display Instagram comments. So, but thank you for joining us. We do have a lot to talk about today. Quite a bit of industry news. We're going to react live to a 2.5 minute clip from PulteGroup CEO Ryan Marshall over there on CNBC, talking about how it's a pretty good market. And my question is, pretty good for who? So we'll talk about that. We also are going to be hitting a story about Nashville sellers, by the way, Hillary. So that's your area expertise. I'd fully anticipate you chiming in on that article. We'll be talking about pending home sales, vacation homes. Is real estate still a good investment? It's been ranked. So we'll see how real estate ranks among investments. And then on the real estate T, the industry T side, there's some real interesting things happening in the mergers. So we do have another MLS that's merging, another MLS board. And Compass is joining the American Real Estate Association. Does this mean that they are saying goodbye to NAR? So we'll talk about those implications. That's very interesting. And then at the very end, let's see. We'll be talking to, oh yeah, that's right. NAR has a Q2 update for their strategic plan progress. So that's what's on the docket for today. So without further ado, let's go to the live react. And, so this was sent to me by someone. If you see real estate content out there that you want me to react to, just send it to me. I might react to it during the show. I am considering, because there's probably 20 things that people have sent to me that's like another podcast or another show somewhere where someone is saying something and they're like, ooh, you should put this on your show. But it usually doesn't exactly fill the news category. It's like in an opinion category, but I'm still willing to do it if we have enough participation on it. I don't want to just put it out there and 3 people watch it, because it does take time. But there's some React content that we could get into if you guys wanted to. We could also just do it on another platform. I don't know. I'm still considering it, but if you got some stuff, send it to me. All right, so let's, I want to make sure, if you guys cannot hear this, chime in over on Clubhouse and such. I also want to make sure it's not going to blast your ears. Okay, so this is CNBC's interview with Ryan Marshall.
So how How do you characterize what's going on in the housing market right now?
You know, Sarah, it's actually a pretty good housing market right now, and we're having some success. And I'll share with you a few of the reasons why. As a national home builder, we're exposed to, we have a broad national footprint. We're exposed to the most desirable markets where people want to live. We also serve all three major consumer groups, so the first-time buyer, the move-up buyer, and the retiree buyer. And we do that through our three brands of Centex, Pulte Homes, and Del Webb. And we've got an amazing team that really knows how to deliver on what our customers are looking for. We also have...
So far, I feel like this is a lot of corporate speak. I mean, doesn't it sound like what you would expect someone to say on an earnings call or something like that? It's just like, yeah, it's very good. We're exposed to a broad range of consumer base. So, I mean, it's just very, very corporate-y. But this is a builder saying it's a pretty good market. Now, that's interesting in a market where we feel like we have tons of supply in the market. So let's figure out what differentiates them here.
We have a tremendous balance sheet and a great land pipeline that's going to fuel our future growth. Still,
like, great balance sheet, land pipeline, fueling future growth. I feel like he put this through ChatGPT and said, use as many corporate buzzwords for a national builder as possible.
Operating platform is really differentiated from some of our competitors. And the results that we just reported last week in our second quarter earnings are really a good example of that.
So is the stock price. I mean, it's outperformed most of the other home builders. But, I mean, Ryan, we're still looking at double-digit declines in earnings.
Get him, girl.
I think, in revenue compared to last year. So I'm surprised to hear you say the housing market is actually good.
We're really looking at the long term, Sarah, and I'd point to the quarter that we just reported where we had 6% order growth. And we saw order growth up in every single category, entry level, move up, and the retiree buyer.
Now that's interesting.
So we're bullish about not only what we're seeing kind of in the short term, but maybe more importantly, the long-term potential for housing in this country and the long-term growth potential for our company.
So he's looking long-term, seeing 6% growth, even though as she pointed out, it's double-digit losses recently.
Does that signal that there's a change, that things are moving faster now?
We saw, I think there was definitely a positive uptick. And I
really
would
looking for it there.
A couple of the geographic regions where we saw strength.
Florida, I know.
We were up 19% in Florida, and that's after several positive quarters in a row.
And this is interesting to me because all my Florida friends are saying that the real estate market there is terrible. So you have a builder that's up 19% in Florida.
What's going on there?
You know, I think there's a number of things going on in Florida. It's a great place to live. There's obviously a lot of sun and sand. There are a lot of jobs. And so I think it's not only attractive to the retirees that are looking for that, but it's also attractive to the working consumer who wants to live and raise a family there. We have great locations there. We've got a couple of new exciting things that we're doing there with some innovative and unique neighborhoods. One called The Grow in Orlando, which is an agri-hood concept. So it's kind of farm to table and you live in the middle of it.
Okay, that would be cool. To see a national home builder start producing neighborhoods like that, that is innovative. That's very differentiated. So to see a national home builder have the forethought, wherewithal, innovation to produce a neighborhood that is farm to table, that's pretty good.
But we have a new brand, Explore by Del Webb, which is resort, lifestyle, luxury living that's targeted to Gen Xers. I'm a Gen Xer. I'm squarely in the middle of it. And they're telling us this is the...
I feel really old when he says he's a Gen Xer. Is he really a Gen Xer? Because I feel like he's like boomer territory, but he says he's a Gen Xer, but he looks older, which means I'm old. I'm the oldest millennial. That's that's the category I am. Just missed the Gen X crew.
The type of stuff that they want, and we're delivering it to them.
Okay, so interesting take. Very different opportunities, especially if you're doing that agri-hood, as someone in the comments who said that. Elizabeth Nightingale says, we have an agri-hood in South Carolina. Lennar is the main builder. Really? Lennar, another big national home builder, and they're a budget builder. I like that. Mia Zoll is in Fort Lauderdale, Florida. She says she can't deal. Hillary says, Elizabeth, who takes care of the agri-hood? Yeah, that's a good question. Do you have a local gardener? I guess a local farmer. I guess if it's an agri-hood, I guess it's more on the farming side. Do you have a local farmer that hops over there to take care of everything? That's really interesting. He's a corporate X, if anything. Yeah. I mean, I like it when they come out and start talking about what they're doing, but I really did find it ironic when he said it's a pretty good housing market, when last week we talked about how both sellers and buyers are struggling. We have sellers that want to sell their house, but they're not able to sell their house for what they need to sell it for. And we have buyers that could get a wonderful opportunity, a really good deal on a home right now, but they can't seem to afford it. And that's a really precarious environment. We actually have a couple of houses in our area are starting to hit the short sale button. So that's been really interesting. I'm wondering how many short sales we will see coming up. For a long time, we haven't seen very many foreclosures or short sales. So I'm curious if we're going to start seeing more and more of those. Elizabeth said they have a farm store and the neighbors have plots, and it's ultimately maintained by hired gardeners. The neighborhood is called Carnes Crossroads or Carnes Crossroads, Goose Creek, Somerville. Interesting. What a fun idea. We have a community plot area. I wonder what other towns and cities have this. We have this place by there's a gigantic park by the river. And there's this big field that was unused for years. And then they started planting it, like allowing you to reserve a little fenced in plot. And you could go and reserve that every year. You have to pay a little rental fee for it. But then you can plant whatever you want in it. So that's been going on now for years and years. Some people have had the same plot for generations.
Kids could do that. They used to like pick you up and take you to these plots, and you had a little garden and you gardened it. This is years ago. But yeah, they have that in Fort Lauderdale too, I do believe. And it's kind of neat, to go into the inner city and work on something.
I always think they would expand it, but every time they've added some plots, some of those plots don't get reserved. So I think in our area, it's a pretty good, it's about what it should be. All right, let's talk about Nashville. It's a quote unquote pretty good market, right? Nashville sellers need to pack their patience for a housing market that now strongly favors buyers. So Nashville is the state's second strongest buyer's market, only after Miami ranked ahead of three Texas markets, Houston, San Antonio, and Austin, with more than 2 sellers for every buyer actively in the market. Nashville's imbalance means buyers have plenty of homes to choose from competing offers to contend with room to negotiate on price and other terms. Buyers are taking their time these days. There's a significant number of listings on the market, and people are taking their time waiting for the right one. In Nashville, new listings are up 9.4% compared to 0.1% increase nationwide. And the typical home spends 78 days in the market compared to 49 days nationwide. But this stat is really, so when you have a national home builder that says it's a pretty good market, but you have a place like Nashville that for sellers, a builder's on the seller side of the transaction. And you have a place like Nashville that's struggling. You're like, well, why does the national home builder say it's such a good market? Well, nationally, supply has only increased 0.1% nationwide. So it hasn't been a huge nationwide increase in supply. So it makes more sense that a nationwide home builder would say, oh, it's a pretty good market. Nationwide, there were an estimated 48.5% more sellers than buyers in June, meaning much of the U.S. housing market also favors buyers. Nashville's seller surplus, however, is nearly 3 times the national level. Hillary, are you feeling this? Hillary said new listings are down 16% year over year and 19% month over month. Really? This market is giving homeowners confidence they'll actually have somewhere to move after selling. Well, that's a good point. Many homeowners with super low, many homeowners with super low interest rates have delayed life changes for several years. Now those life events can't be postponed any longer, so they're entering the market despite the higher rates. Some sellers recognize that the frenzied appreciation of 2021 and 2022 has leveled off, and they're choosing to sell while home values remain relatively stable rather than trying to perfectly time the market. And Hillary said the new listings down 16% and 19% month over month was courtesy of the Greater Nashville Realtors. You should send this article to the Greater Nashville Realtors. Many sellers are learning the hard way. They're turning down early offers because buyers are coming in low, only to realize down the road that they're still getting low offers and need to lower the price. Then they promote their Redfin Early Access program. Years of home building, high prices, and mortgage rates have shifted the balance towards Nashville buyers. So there you go. Sellers are facing more competition. And then here's the ranking. The 5 strongest buyer markets in the 50 most populous metro areas in June. Miami, 139.7%, by which the sellers outnumber buyers. Nashville, 128.8%. Houston, 123.8%. San Antonio, 117%. Austin, 101%. That's crazy. So more than double. All right, but it's a pretty good market, right? Pretty good market still. It's a pretty good market in which pending home sales fall to a 3-month low. That's right. U.S. pending home sales fell 1.3% week over week to their lowest level in 3 months. The decline in home buying, and by the way, for those of you who are listening to this, maybe you're listening to the audio and you're trying to clean your house and you're a real estate agent. And you're like, I really wanted some good news here. Or you're out there mowing and you're like, this is depressing. Hang in there. Hang in there. I got some stuff for you coming. The decline in home buying demand comes as weekly average mortgage rates rise to an 11-month high of 6.55%. Additionally, home prices are stubbornly high, sitting just about $900 shy of their all-time peak. The topsy-turvy U.S. economy, including the resurgence of the Iran war, rising oil prices, and other factors driving would-be home buyers to the sidelines. I still have not had a single buyer tell me that they're not going to buy because of the war. Maybe some after effects of the war, like the increase in prices on stuff. But I've not had one say, man, the Iran war, I cannot buy this month. But regular resale is not the only market that's been hit. This is interesting. Vacation home mortgages tick up for the first time since the pandemic boom. U.S. home buyers took out 4.1% more second home mortgages in 2025 than they did a year earlier. That marks the first annual increase in 4 years, following declines from the pandemic peak era in 2021 and 2024. So there's a chart here that shows the vacation home mortgages rise faster than those for primary homes. And that's a really interesting stat. It almost feels like people are buying a second home and not selling their first yet. Like, I wonder what percentage of the quote unquote second home mortgages, it's actually a primary home that they want to get to in the future, but they still have this other house. Second home purchases are starting to rebound and outpacing growth in purchases of primary homes because of affluent buyers who are less constrained by today's housing costs. While we are seeing more affluent buyers purchase, the median home price in our area is up, and it's not up because of the increase in purchase prices in the median. It's actually up because of the number of homes that are selling in the luxury part of the market, which we talked about last week. So here's the demand for second homes. You can see this huge drop. That's wild. For context, for the audio listeners, it was in 2018 it was 175,000. 2019 it was 179. 2020 229. 2021 was 258. Which makes sense, right? During the pandy, you had a whole bunch of people saying, "Hey, we can work from anywhere now because it's all it's all good. We can go work on the beach. Why are we sitting in the middle of this city that is requiring us to wear masks?" And so you had a huge number of people purchasing second homes. And then look how much that has dropped. In 2022, it was 150. And then 2023, 2024, 2025, and rates got not so good. It's 90,000, 86,000, and 90,000. That's half of what it was in 2018, 2019, and 2020. Less than half of what it was in 2020. So we're seeing a very slight rebound. They're like, oh, it's rebounded. Only by like 3,000 units. But it is good news. I've been speaking with some Airbnb purchasers, and they've been talking about returning to those second home purchases lately because they're seeing those numbers stabilize. About 2 years ago, maybe it was a year and a half ago, the Airbnb guy came out and said, "Hey, with all these additional vacation homes that are on the market, we are seeing a compression in the amount that a home buyer could make from purchasing an Airbnb and putting it out on the market." And we talked about the long-term repercussions of that as the ceiling gets lower on what other people could charge for rent on the second home and how many fewer second homes will be purchased. And that is definitely what we've been seeing. So maybe as that recovers, we'll see this number start to go back up and more of those homes change hands. Okay. But is real estate still a good investment? It's actually still ranked number 1. Oh, what's up, Jack? I guess we'll let you up here. Real estate's ranked number 1 long-term investment for the 14th year running. Americans' perceptions for the best long-term investment is real estate by far. Gold is at 18%. Stocks is at 20%. Savings account CDs only at 12% and bonds at 4%. Cryptocurrency is only sitting at 2%. I thought with some of the changes, I guess maybe it takes a little while to update reporting, but I thought with some of the recent changes and how people are looking at crypto more favorably and actually having some utility with the crypto, that would be a lot higher. But it's only 2%. A streak that started in 2013. To take you back, you remember what happened in 2007, 2008, 2009? We had the world real estate market crashed. It was a giant U shape of home values from 08 to 12. And people that bought in 08 were finally able to sell in 12 for what they bought it for in 08. Well, 2013, people started to say, yeah, this is a good investment again. So it started to make a comeback. What about all the doomers? This is interesting. It says, scroll any real estate feed and you'll see the opposite of this data. Crash calls, scary headlines, and some version of just wait. That just wait has been happening for years and years and years. If you recall Susie Orman, just to bring her back up. I know Jack loves hearing it. I mean, just to recall, she was bad, and she made a really bad call. So if you were following her, yeah, congratulations. Now you have no house and you're going to pay 7% interest rate for it.
I wish Dan was here to talk about Susie with us.
I know, right? Hey, I'm wearing it. He's on my shirt today. See? Well, one of the reasons why people keep believing that real estate is a good investment is because of headlines like this. U.S. home prices hold near all-time highs, but with weak momentum. Even with weak momentum, The thing we always said, me and Dan said, that you have to look for in the headlines is home price gains slow. You'll see home price gains slow, but whenever you see that, you have to remember that they're still saying home prices are gaining. They're just gaining at a slower pace than they were. And we will never see another crash like we saw in 2007 and 8. There would have to be massive fraud injected into an over-regulated industry. It's just not going to happen like it was. But we will see home price gains fluctuate, where some years it'll be higher than others, some years it'll be lower. But real estate is going to go up, which is why it's a good long-term investment. So even as the U.S. housing market trudged through a prolonged transaction downturn amid elevated mortgage rates, home values have largely held up near their pandy era peaks. So the gains that you got during the pandy, for the most part, you're keeping them. It's just not going up as rapidly from now on. So your area may have had back-to-back years of 24% appreciation. And now you're at a 0.3% appreciation, and you might sit there a couple of years. But you've had 50% increases over the last 3 or 4 years. So that's where we are. Home prices are not going to go down. You will see list prices go down. But I think overall valuations, as the numbers shake out, will continue to go up in most markets. There will be some markets where that is not true. But I think in most markets, that's what we're going to be seeing. The change leaves home prices about 0.9% higher nationwide than they were June of last year. It's relatively weak growth by historical standards, but it's the highest year-over-year mark recorded since August. Let's see. At no point did the national market experience price declines over the full 12-month period at the national level. So historically speaking, even in recessions, home prices have increased. There's only been 2, I think, where home prices went down. Otherwise, they went up 3 to 6%. The 2 that they went down, one of them went down negative 1.9%. The other one went down, you guessed it, 19%. You know when that was. So real estate's still a good investment. But what if you were a landlord and you were in New York City? Is real estate still a good investment for you? And is there anything you can do right now? Because rent freezes are on the rise. Let's watch this quick. I'm not going to watch all of it, but we'll watch part of it.
Shifting gears now to a big legal fight that is brewing in the Big Apple. A group of landlords are now suing New York City over Mayor Zoran Mamdani's rent freeze plan.
So whenever I saw the rent freeze go into place, I wasn't thinking about a lawsuit. I didn't think there was anything they could do because they've had rent freezes in the past. So I'm curious to know how they're going to do this.
Impacts 1- and 2-year leases for roughly 1 million rent stabilized apartments. A really big impact. Well, the property owners call this freeze an unlawful abuse of power, and they are claiming the mayor puts tenant activists on the board to make the decision, and then they say it was done just to give Mamdani a political victory. For more on this now, we bring in Republican Congressman Mike Lawler from New York. Sir, thanks for joining us. Predictably, a lawsuit here, landlords pushing back. Your thoughts on whether or not
she says
they will
predictably. I
succeed
did
in the
not predict
courts?
that one. My bad.
Well, they certainly have a valid case. And when you look at the challenges in New York City, you have tens of thousands of vacant units, in large measure because of New York's draconian rent control laws. These laws apply to units built before 1974. And the problem here is that they put these, freezes in place, yet they require the landlord to upgrade the apartment to code. They require the landlord, of course, to pay increased taxes.
There it is.
Of course, to pay increased utility bills. New York State having one of the worst energy policies.
So this is the rub. I want to try to find where they start to talk about exactly how they're going to approach this. But basically, everything for that landlord is increasing except for the rent. And so rather than fill the rentals with people to pay, they don't fill them at all because they can't rent them at that price. So they would rather sell them or keep them vacant so they don't have to do any fixes on them. There's no code upgrades. There's no repair work that they have to do if they stay vacant.
In the country, utilities are up 58% over the last year. So their expenses keep going up, yet they're saying they can't raise.
Fast forward a little bit.
And what he's actually going to do is create more vacant units as a result of this rent freeze, because the landlords will take the tax write-off rather than put out the expenditures upwards of $50,000, and they won't be able to recoup it. So they'll end up taking the tax write-off. I introduced legislation on squatting. This kind of craziness needs to stop. Bottom line is we need more supply.
Yeah, and we'll see if this all ends up before the Supreme Court yet again to see if we get to an ultimate conclusion on that. But I want to bring this to you as well. Mayor Mamdani is now saying that New York City lacks the legal authority.
Okay, I think that's it. There's some other stuff in there about Mamdani's words, but rent controls. We'll see if I think rent controls have been put in the past, so I don't feel like they have much of a case. It would be interesting to me to see if this actually does go before the Supreme Court, and if it's decided, that means no cities across the Americas can put in rent controls, which is, I think, a better thing. I think capitalism is good. So I know some of you hate it. I like it, and I want more of it. So I think letting the free market work is a wonderful way to solve a lot of problems. If landlords are able to make a bunch of money off the rentals, then guess what is going to happen when those rentals fill up? More rentals will be built because they can make a bunch of money off of them. If they can't make a bunch of money off of them, they're not going to increase the supply. This is just easy, simple logic. So you want to make it profitable for the person that owns the building so that they are encouraged to buy and do this in more buildings. And the more supply that's out there, guess what happens to the price? It starts to control itself down. And I know you can say, well, yeah, all these guys are controlling it. The first guy that comes in that's not a part of that builds their own thing, and he's going to fill up so fast. And that's what happens. People are going to see that and say, yeah, we should have rented it cheaper. Okay. Let's switch gears to some industry tea. Wait, let me check your comments. Okay, yeah. There's nothing on that one. Good. Let's switch gears to some industry tea. We've been talking about mergers and association mergers and brokerage mergers, and that, of course, has all been in the news. But here's one with an association merger for Southeast Florida with Board MLS access. So let's read through it real quick. Roughly 2 months after the first and third largest local realtor associations combined forces, the organization announced on Thursday that Martin County Realtors of Treasure Coast has joined the fold after overwhelming support from members. With about 94,000 members, and the new association further solidifies its position as the top largest local realtor association, even larger than most state associations. The merger further unifies the Southeast Florida marketplace of Miami-Dade, Broward, Palm Beach, Martin, and St. Lucie counties, and gives members access to the most complete South Florida data set and the third largest MLS in the country. That's huge. Additional benefits include access to Flex MLS Matrix platforms, free IDX feeds for both Miami MLS and Beach MLS, more than 2,800 educational programs, more than 300 products and services, 300 global partnerships, free Supra, whoop whoop, more than 11 data sharing partnerships, the collective advocacy of more than 93,600 realtors. I want to know if they have a MCP. So if you guys have this in your MLS, I want to know. I was talking to a friend the other day, and an MPC, anyway, a server that connects to the AI, their MLS just released one, and they're able to send full data sets to the AI. So they can connect it, and as a member, they can use AI to go through all the data, to do comparative market analyses, etc. So I think the mergers and acquisitions of these boards is going to lead to a ton of innovation. MCP, thank you. Thanks. It's going to lead to a ton of innovation, and it's coming at the right time, because you could do way more as a big board collecting all that money than you can as a small individual local board. All right. Now this next story is interesting. It's about Inman. It's kind of meta, right? To do news about the news, doing news. But Inman says it unveils a new platform and calls it the Bloomberg of real estate. We have been discussing this because, as you know, Inman also put a ton of people on their quote unquote advisory council board thing that were mostly the sponsors, the people that, you see their ads on Inman. And one of my big questions was, is Inman going to be able to stay independent and call out those people that are on that advisory council / board and do the actual journalism that's necessary and needed in real estate? Or will they kind of bend the knee to some of those folks and attack others? Will they be as harsh with someone that's on their advisory council / I can't remember what it's called / the board as they would with some other company that's not associated with them? Well, now they want to be the Bloomberg of real estate. And Bloomberg is it's definitely a journalistic platform, but it's most known probably for its, overarching finance and economic news and data worldwide. So he referred to the platform as Inman 2.0, and it's designed to consolidate the fragmented sources agents and brokers currently rely on for their news and data. He said, we're building the Bloomberg of residential real estate, the definitive community of the profession. I don't associate Bloomberg as a community. Do any of you guys? I don't feel like there's a community around Bloomberg. I thought it was more of the news. Boney pays tribute to the former founder, Brad Inman. He says in his opening remarks at Connect, which marked one of Bond's first major public addresses since joining the company, he paid tribute to Brad Inman, who founded the company in 1996. Let's see. What comes out the other side is a moment like this. I'm sorry, I'm butchering this sentence. It's not an important sentence. Let's just keep going. A call for 1K citizen reporters. Central to the platform's rollout is a push for agents and brokers to contribute local reporting directly. He announced Inman is recruiting 1,000 agents and brokers to serve as citizen reporters, providing on-the-ground coverage from their own markets. A national newsroom like Inman, as good as we are, cannot stand on 1,000 street corners at the same time. He said Inman's existing editorial staff will continue producing coverage alongside the citizen reporter program, not in place of it. We'll always have the best professional journalists in real estate. That's not changing. Agents interested in participating can sign up starting this week. So if you guys want to write articles for Inman, I can highlight your articles on the show. Yeah, the advisory council. That's what I was talking about. He also introduced the advisory council. He said the council was assembled to bring outside expertise into the company's direction. I'm wondering if the citizen journalists are nationally focused or if they're locally focused. If they're locally focused, to be frank, it's a little less interesting to me because, rarely do we do articles about one specific place without mentioning others. For instance, we just talked about an article about Nashville today. So could Hillary be the Nashville correspondent for Inman? Sure, absolutely. And if she was, would the Nashville correspondent for Inman also write about San Antonio, Houston, Austin, and Miami? Maybe not. Maybe her articles would be more focused on Nashville. And if they are, to me, that's less interesting because this is a national show. So I have a very specific audience. I try not to pigeonhole into one or two markets unless there's something outstanding, sensational, like super interesting happening in that one market that could impact the broader real estate industry. Then we'll talk about it. But real estate's local for the most part. So if a real estate agent is writing about a local story and it's market focused, which a lot of real estate agents are going to be market focused because who are we thinking about targeting? Buyers and sellers. Then who's going to click on that is in the audience for Inman? I don't really think a lot. Now, what about a story highlighting a merger, like we just saw the merger in Florida? Would that be interesting? Yes. That's interesting because of how it affects the broader real estate market. So I'm a little curious if the addition of 1,000 real estate agents writing articles for Inman, or maybe it's just giving data, but it said citizen journalists, citizen reporters. I'm really curious if that's actually going to be beneficial to the broader audience of Inman readers. Or maybe they're trying to get very niche. Maybe they want to have like an Inman Nashville, an Inman Arkansas, Inman Missouri, Inman LA.
Feels like they're trying to scale on a budget.
Yeah, good point. Yeah,
to say it nicely.
How much are those citizen journalists going to get paid? $0.
Yeah, I mean, and not that that's a bad thing, but it sounds like they're trying to reinvent themselves. We certainly don't know what their revenues are, and maybe maybe not that there's a dip and they're trying to do different stuff. But I agree with the potential of it all.
The agents will get paid by exposure, which is what you tell photographers. Oh, I'll give you exposure. Just take my picture for free and I'll tag you. Yeah. Okay. That's what all creatives get told. Whether you're writing,
that's why I show up here every week.
Yeah, you're paid by exposure. Thanks,
for my cred. My business has gone through the friggin' roof. Talking with a guy from Arkansas.
There you go. See what happens?
Yep.
No, it's an interesting strategy. I just don't, providing on the ground coverage from their own markets. To me, that sounds like it's going to be local market data, but I could care less what happens in Podunk, Tennessee. I'm not saying Nashville's Podunk, but how local are we going to get? In a specific suburb of LA, and you have somebody reporting on what's happening in that specific suburb. I'm not interested at all, and I am a Inman subscriber. So I just don't know the value add of these 1,000 citizen reporters. Now, if these 1,000 citizen reporters start to spill the tea, I'm vested 100%. If they start to say, hey, Sally currently runs the board of this small town, and Sally has been there for years, and the board has millions of dollars in savings and only spends $100,000 a year on the awards banquet. What are they doing with this extra money? And why is Sally making $250,000 a year for managing a board of only 5,000 agents? And I'm not saying that from experience. It's just a question of the type of reporting that I would find very interesting. If Sally's kicking people off the young professionals board because they wanted him to do the social media marketing for the YPN group, but he wasn't allowed to log in to the social media marketing, and instead they had an unlicensed assistant doing that, and he had to bend a knee to the unlicensed assistant to get anything posted, and they refused to post the stuff that he was sending. That kind of...
What's on your mind, Ray? What a yarn you're spinning here.
I'm just saying, if that were to happen, and if there was reporting along those lines, talking about these chokeholds that some of the good old boys and ladies have on some of these markets, now that would be interesting. But
that would change Inman though quite a bit, wouldn't it?
I mean, that's what they were talking about all the time. They're just talking about it about big cities.
Yeah.
That's the only difference. I mean,
Yeah, you might be right there.
That's it. It's just a big city. The difference is they talk about it at the New York and LA and Miami level, or, South Florida. That's it. But it's the same T. It's similar T. Podunk Brokerage A just acquired Podunk Brokerage B, and now they're keeping all their listings off of the MLS and are joining ARA. That would be interesting.
Yep. Especially if you could find the ember that lights the fire and all this stuff, right?
Yeah. So, yeah. Last week, subscribers were notified that Inman's 3-tier current subscription products, Select, Access, and Intel, will soon be consolidated into 2 simplified membership tiers, Select Plus and Select Advantage. The goal is straightforward to make it easier to understand what's included. What else is happening on this? News, reporting the news. 2.0 isn't just an upgrade, complete reimagining of what Inman can be for you. So rather than simply adding more content or features, the vision is to create a membership that helps real estate professionals cut through the noise. So it looks like they're going to actually, you know what? It looks like they're taking notes from Broke Agent Media, to be frank. Broke Agent Media has a whole coaching / do this to get seen on Instagram and social media. They have a whole thing about that. So I feel like they're taking a page from Broke Agent Media and starting to try to add the coaching realm, which is interesting because when Broke Agent Media started, a lot of people compared them to Inman and said they were copying Inman, and now Inman's copying them. I don't know. We'll see what it looks like. They said that they were going to have a sneak peek, and if you click on the sneak peek article, there are no photos or anything. It's just talking. I thought this was interesting too. Oh, it may be in slightly the wrong place, but we'll cover it quickly here. It is a little bit about the industry. Homesellers are objecting to price and not commission, survey finds. More home sellers are showing up to listing presentations with data around what they think their home is worth, yet fewer of them are objecting to listing compensation or listing agent commission than in 2020. I haven't, my entire career, I've not gotten pushback on the listing compensation because we add so much value to the seller. So I haven't heard this much. I have heard some agents, more and more agents are discounting themselves, but by the time we're in front of them, it's really about the price. And every time I've lost a listing lately, it is because another agent has told them that they could sell way more than what I told them they could sell for. And it's a pipe dream. It's not happening. I met with a wonderful family who sadly father had passed away. I met with them. I did a ton of research on the property. I did a competitive market analysis, competitive listing analysis. I did a complete absorption rate analysis. I know what price this property is going to sell for. I told them what it would sell for and told them what we could try to go for with marketing and exposure. Maybe that could happen. They were forced by another family member who was not at that meeting to list with another agent, and they listed it almost $100,000 over what I told them it would go for. $100,000. And so what I said is, hey, if this agent says that they could sell it at that price, I need you to do me a favor and never drop your price with them. And they're like, what? I said, well, they said they could sell it at that price, right? And they're like, yeah. I said, that's why you're going with them, right? And they're like, yeah. I said, well, never drop your price with them. Just call me if it doesn't sell, and then we'll sell it. But don't drop your price.
Ray,
Yeah.
That's where SCAP comes in. What I do, and no, seriously, what I do is they go, okay, this is what we want. I go, all right, I'll tell you what, let's have it. I'll give you 3 senior appraisers to pick from, and then you pay for the appraisal, and at closing, I will pay it back. So
nice.
It takes it out of your hands. And every time there's been a problem, that's what I do.
I love that.
Has anybody taken you up on it?
Yeah, several. Oh, definitely. That's
They've
how I
hired the
do it.
appraisal. That's pretty
Yeah,
cool.
all the time. When I can't come, I mean, when they want to list it that much over, and they're okay with it because you're paying for it, and you're actually not paying till they go to closing.
Oh, interesting.
And yeah, what Jimmy Mackin said, because I was binge listening to Revy, he said, if you're going to cut the price, you cut it quick and you cut it deep. So, their high listing would do that. But if you had it appraised, it takes it out of your hands. And what you tell them is, it doesn't matter unless they're paying cash. It's got to appraise for the bank. And if they're paying cash, they're smart enough not to spend as much money as they, they're savvy anyway. And they may ask for an appraisal also, a cash buyer.
That's cool. I've done that a couple of times where an appraiser comes in and does the full appraisal for us. It's more or less to prove my point. But I don't cover the cost of it. Normally I have them pay. I like the idea of having them pay for it, but telling them I'll reimburse it once the home sells. Living in Columbia, SC, Courtney says, I've done it before. I have them pay, and like Mia, I'll reimburse them for it. But they have to pay for it up front because their appraiser, because our appraisers don't wait to get paid for the job. Yeah.
Not only that, it takes it out of your hands, meaning if they pay for it and they pick the appraiser 1 out of 3, then even, of course they think you're manipulating it, but you're not, because they pick the appraiser and the appraiser is certified, senior certified, and he's not going to screw around for one person.
Yeah, that's true. Hillary said, I've done Mia's appraisal trick before, and the seller said, why would I trust what one person says when there are people who pay more for it? I walked away from that nightmare. Yeah. Why would I trust the opinion of somebody like Scap? Oh, Scap's not here to defend himself, so I better.
Then guess what? Their listing isn't worth it because they'll get an offer.
They're the dangerous ones that you're going to just spend a bunch of money on and they're not going to sell.
Correct.
Yeah.
If he's not here, that's sort of more of a reason to pile on, isn't it?
Yeah. He does I mean, would anyone really trust Scap's numbers? Is what I was going to say. But
did you? I saw a headline in Inman this week about an appraiser warning of this dissemination or lack thereof of common MLS data because of the MLS wars, that it's going to hurt appraisers.
Interesting.
Yeah, I'll find it and I'll put it in the in the WhatsApp group.
There's another article. Actually, there's a couple more articles that we need to cover before we go here. Exclusive. Compass joins the American Real Estate Association. I think they're calling themselves ARA, which is confusing because Arkansas has an Arkansas Realtors Association, ARA. And I really liked the name Area better, but maybe that's already an organization, AREA. Anyway, Compass International Holdings joined the American Real Estate Association. Inman learned exclusively on Tuesday. Agents on the company-owned side of Compass International Holdings, 9 brands, At Properties, Better Homes and Gardens, Century 21, Christie's, Caldwell, Compass, Cochran, ERA, and Sotheby's International will receive complimentary membership for the remainder of 2026 and all of 2027. Currently, agents can join for $20 or pay $1,500 to become a founding member, which covers dues for 10 years. When we launched the American Real Estate Association, our mandate was clear: build a unified voice. Okay, this is kind of like a PR talking point. It proves that the future of real estate belongs to the dedicated, highly skilled advisors who put clients first and demand higher standard for professionalism. Okay, they're talking about the history. So this is what Compass said about it. Competition makes every industry better, he said in a written statement. For too long, real estate professionals have lacked real choice in national representation. By joining the American Real Estate Association, we are supporting a competitive alternative that must earn agents' trust and prove its value. Our agents will have the choice to join this residential real estate association that is now competing for its members to provide better value. That's a pretty big win for them. Considering how gigantic Compass is now, for Compass to join ARA is a huge win for them and a giant, it's just a giant shift to NAR, especially with NAR kind of, bending backwards to stay out of the Compass versus Zillow stuff. And if Compass, I feel like if NAR were to move to the buyer side instead of the seller side, my opinion of NAR right now is that they need to protect sellers' rights, and sellers shouldn't be forced to put their home anywhere they don't want to be. And a real estate agent should be free to market a home how a seller wants. That's my current stance. No matter where the buyer is, that does not matter. A buyer is not a property owner. If NAR shifts to support the property owner or the property buyer side, they would have more support from the government because the government sees the poor buyer who doesn't have a home. And they would be in direct, they would be in a fight basically with Compass's stance, and they would get a ton of support. So I wonder if this is a move signaling to NAR like, hey, if you don't stay out of this, we'll just move everyone over. If you do stay out of this, maybe we'll come back over to you and be kind. It doesn't say that they did unjoin NAR. They're basically a member of two organizations now. But this is big this is really big for ARA. If agents at Compass, company-owned brokerages, are as eager as RE/MAX agents to join ARA, the association could find itself in the upper echelon of trade associations before the year's end. Haber said ARA will reach out to Compass International Holdings franchisees in the coming weeks about partnerships and membership benefits. That's what I want to know. What are the membership benefits? So Jason was actually on our show a while back when we were talking about the whole SA stuff that was happening at the NAR head level. And speaking of NAR, the International Association of Realtors released the second quarterly update on the strategic plan. Nakia Wright said NAR's responsibility executed through our strategic plan is to deliver strong advocacy, clear guidance, and applicable tools to help you serve your clients, grow your business, and lead your communities. Legal and advocacy wins, they highlighted some of those. Tools, transparency, and member resources, MLS guidance, broker resources, market intelligence, governance changes, and educational overhaul is really what was highlighted. I'm not going to go to the specifics. You guys can see that. It's a free article on Broke Agent Media, and it looks like on the webcast that it's blurred. Okay, it cleared up. It was just on my end. And then there's another article on Inman. We really don't have time to go through it too much, but it's just talking about all the power brokers and all the consolidation that's been happening. Of course, it highlights Real Broker. It highlights Compass. It spends an inordinate amount of opportunity talking about eXp Realty that just bought a 1,500 person group, which is not gigantic. But this is, where's the timeline? This is what I want to get to. Here it is. The timeline of brokerage consolidation. Something struck me on this timeline, and I want to see if it strikes you too. NAR proposed $418 million settlement announced. That was March 15th, 2024. Compass acquires Ladder and Blum. Compass acquires Parks Real Estate. The rule change takes effect August 17th, 2024. Howard Hanna merges with Big Hill Realty. Howard Hanna, Alan Tate requires Allegiance Group. Compass acquires At Properties, Christie's International, and Real Estate in Ansley. Compass closes that deal. Howard Hanna merges with Home Experts Realty. Keller Williams does the Stone Point Capital Strategic Partnership, which I'm not really exactly sure everything that's come from that. Rocket Redfin merger signed. Rocket companies to acquire Redfin. Compass and Home Services of America report denied. Anywhere makes an unsolicited bid for Douglas Inman. Approach reported no deal. But listen to this. So it has Rocket Redfin. Howard Hanna requires Marquee Realty. Howard Hanna acquires Coastal Properties. Compass acquired Anywhere. Howard Hanna acquires Elgin Real Estate. Compass acquires Anywhere, closes. Howard Hanna expands to Philadelphia. I'm putting emphasis on it, so hopefully you get it. Real Remax does their thing, and EXP gets Next Home. Did you see how much Howard Hanna was in there? Howard Hanna is not in my market. I've never seen a Howard Hanna sign in my life. But they're getting bigger and bigger and bigger, following the same model that Compass followed.
They're in Cleveland, and I'm trying to get Sue Sloan. She knows a lot about them, and I don't think they're that old. So, and I'm not sure. They give them a lot of perks, but I think they're only in Cleveland right now, unless obviously
Do y'all remember what they did in 2021?
Howard Hanna's big here.
Where's here? Say here for everyone that's listening.
Pennsylvania. I'm in Pennsylvania, and Howard Hanna's been here forever.
Yeah. Do y'all remember what Howard Hanna did in 2021?
No.
Refresh my memory, please.
Were y'all not listening to the show? They sued Compass. We covered it on the show. So Howard Hanna sued
I must
Compass.
have missed that one.
One of the reasons why they sued Compass is because Compass was targeting 3 specific local managers and agents. After speaking with, I think they spoke with them, Compass spoke with them about buying the company. And then they looked at the company numbers and took that information and then targeted the top producers. And so they sued in 2021. So it's really interesting to see them kind of taking the same route. They're taking the same route as Compass and just doing the acquisitions. Let's see. Let me see if there's anything else on that. No, there's not. They sued them.
Do you think any of these mergers or new models are making agents change? And the caveat is for the benefit of a consumer.
What do you mean? Expand on that.
Is somebody coming up with a better mousetrap for a consumer advantage or consumer protection?
I mean, the only one who I see is looking out. Well, it depends on the consumer, I would say. Jack, I think it depends on if you're on the buyer side or the seller side. If you're on the buyer side of the transaction,
but everybody's on both, right?
No. If you're on the buyer side of the transaction, Dwiggins at Next Home. Who else do you have? I can't remember the specific brokerages that came out against Compass's stance, but basically any of the brokerages that are against Compass's stance, they are more on the buyer side, supporting buyers' rights to see whatever properties are out there. And I think in actuality, they're on the real estate agent side to be able to see everything that's out there. But in their comments and how they're presenting it is on the buyer side. There's also a lot of politicians on the buyer side.
Wait a minute. I mean, I happen to be against I happen to think that more safeguards need to be put in place, like a disclosure statement for the benefit of the seller based upon the private exclusive theory.
So my take is pretty much squarely on the seller side. I think a seller should be able to market and sell like they want to, period. And if they want, if a seller says, hey, I want my house on homes.com and not on Zillow, they should be able to do that. If they say,
but as licensed professionals, we should be, and I'm sorry for cutting you off, but as licensed professionals, we should be able to, we should be responsible to properly convey the risk reward to that approach. And that's what I think is missing when you put profit or company first, or a business model.
But you also assume that all of these professionals, and I want you to think back quickly over the last couple of transactions you had, Jack. You're also assuming that all of these highly trained real estate professionals can adequately explain the positives and negatives of marketing on various channels. I just don't think that's possible, because I could talk to someone that's a property has to be everywhere, and I can quickly debate them and help them realize that no, a property doesn't have to be everywhere. And as a matter of fact, if it's everywhere, it could be detrimental to the seller. And if I can do that, then the form has to be appropriately neutral. And if the form is neutral, then you're relying on the agent. You're relying on the agent who sells maybe 4 homes a year to disclose it's just, so I think, it's a fine idea. It's a fine goal, aspiration to say this disclosure should be made, when in reality, the disclosure paperwork just needs to be neutral, and the buyer or the seller should be paying attention to the value of the marketing proposition. I think there's agents that could go with the 3-phase plan that Compass does. And phase 1, it's off the market, private, exclusive for the brokerage. Phase 2, it starts to open it up, is coming soon. But in that private exclusive moment, to be able to open it up to other real estate brokerages and agents that may have a buyer for it, or maybe a website that I wanted to put it on that is specifically targeting a type of buyer, I think that should all be fair game. I don't think a seller should have to force it anywhere. And in that phase, there could be a Compass agent that is terrible and sucks at marketing that phase 1, and it's going to be dependent upon that agent's ability to execute the plan, not just the brokerage philosophy. So there also could be an agent that is incredible at that phase 1 and sells a ton of properties that way, or at least, figures out the pricing and all that kind of stuff they want to figure out.
Sucking is no excuse when licensing is involved. It's like hiring an attorney, but you need to study up on the law before you make your own decision.
Yeah. Well, I mean, we have to do that in real estate. So
the first thing that the seller says when the house isn't selling is, you must not be marketing it well enough, or you need to spend more money on marketing, or where are you not marketing it? It's always our fault.
That's not what, Terry, that is not what my sellers say.
Nor me.
Really?
Yeah, I show them the numbers. I'll say, look, Zillow has exposed your home to 2,000 people. I've exposed your home to 20,000 people. So what do you want to do? And for me, it's the same answer every time. It's price drop. Occasionally they'll say, well, I guess we better, update the flooring or do the carpet based on the feedback or whatever. But normally it's just a price drop. So, and we get that a lot, but that's because I can prove the marketing side. I can show them, here are the numbers. They can see that it's gotten the exposure.
Or you need to bring in the ozone machine.
We have done that recently. We used to ozone on 2 or 3 deals recently. Wait, we have some breaking news, everyone. Breaking news from This Week in Real Estate. Packet Watchdog in the comments on the YouTube said, hey all, federal interest rates holding steady? ? And they are. The Federal Reserve left interest rates unchanged on July 29th, 2026, holding its benchmark lending rate steady at 3.5% to 3.75%. This marks the 5th consecutive meeting policymakers have chosen to maintain this rate. despite the new Fed chair, Warsh, which always sounds like a Southerner saying wash. So yeah. So thanks for tuning in, Packet Watchdog, and thanks for the heads up there. So I could say between Claude AI and paying a legal attorney to make it more bulletproof has saved me a ton from paying buyer and seller costs for a real estate agent on a property. Oh, I see what you're saying. Yeah. So you're not a real estate agent? You don't pay real estate agents? I can tell you on the real estate side, I get texts from clients all the time that are using Claude and ChatGPT, and I could see based on how the text is bolded and formatted that they use ChatGPT, and we gently help them to the correct answer that saves them buttloads of money. So it could be that you're not seeing the benefit because you don't have a comparison who's well qualified to look at the AI and say, actually, that's terrible advice. Here's what you should do if you want to get what you want to get. So you never know. The Federal Open Market Committee approved the following statement for release by a 9-3 vote. So last time it was 12-0, I think it was, and this time it's 9-3. The committee decided to maintain the target rate for the federal funds rate. The committee, instead of reaffirms, it says the committee is continuing its policy of maintaining ample reserves. It added a section that says voting against the monetary policy action were Beth M. Hammock, Neil Lori K. Logan, who preferred to raise the target range for the federal funds by a fourth. Wow. So it's a 9-3, and the three who voted against keeping it were voting for a fourth of a percentage point increase. Isn't that interesting? All right. So that's all we got. Thank you guys for tuning in this week. Wait, I gotta find the music. Oh man, that's the wrong one. There it is. Well, thank you guys for tuning in this week. Next week, I will not be live. I will be at Tom Ferry's real estate conference in Anaheim, California. I will be on a short call introducing the book club. If you have missed that, you can go to Razorback. That's RAYZORBACK over on Instagram. Send me a message. Tell me you want to be a member of the book club, and I will add you to the email list on August 5th. Is that next week already? Wow. On August 5th will be our first meeting as a book club where I'll introduce the book Atomic Habits. That's what we're going to be going through as a group. And we're not going to be talking about like why the artist chose to use this or that color of door in his description. We will be talking about how to apply Atomic Habits to our life and what difference does it make in our life and business. So if you want to be a part of that, it will be every Wednesday at 2:00 Central. Hang on, let me see. It's funny because I just changed the time. Normally it's on Thursdays. Now it's no longer on Thursdays. It will be, I should add this. I'm going to add this to the group chat for the contributors too. Okay, yes, there it is. It's at 3 p.m. Eastern. That's 2 p.m. Central. Is it August 6th? August 6th is real work, right? That August 6th is a Thursday. August 5th is the call. Yeah. So if you're in Real Broker, August 6th, you'll be introduced to the thing, and you will join us on August 12th for the first actual discussion call. There you go. I got you, Hillary. I got you. So send me a message if you want to be a part of that. Love you all. Thank you so much for watching the show, and I will see y'all next week. Bye, everybody.